The market is giving dog days of summer vibes this week. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, July 31st. We know that selling or buying a home can be very stressful and confusing, and that's why we do these weekly videos so that you can feel more comfortable knowing how the market is impacting your options as a home seller or buyer. As always, we like to start off with how the market performed this past week. There are now 75 homes on the market, 5 more than we had last week. And the average asking price jumped a little bit, $100,000 actually, up to $1,934,000 from the $1,812,000 last week. 4 homes went pending, 2 less than last week. And the average asking price on those pending sales was very close to last week's, about $20,000 less at $1,887,000. And 5 homes closed this week, nearly half the number of homes that closed last week, and the average sales price dropped significantly from $1,789,000 over $140,000 down to $1,649,000. Okay, so now that we know how the market has performed over the past week, I like to look at the broader trends and indicators that can help us understand and determine where the market might be heading. Before we do look at those trends, if you find this information helpful, why don't you hit that subscribe button down below so you stay updated and don't miss out on future updates. And while you're down there, if you could share it with a friend also, everyone deserves to be in the know about their local real estate market. Oops. Okay, let us look at those trends. Inventory levels rebounded this week, like I said. Like I said at the beginning. So it's a disruption from the encouraging trend line that we have been seeing over the past couple of months. They didn't increase too significantly, but I would prefer to see this number continue to decrease, obviously. However, in a little more positive news, the inventory numbers, if you look at both what's new or active on the market and coming soon, has now reached a 4-month low. So it looks like less homes are coming on the market in the future, which could turn us back into that downward trend on the total inventory levels. So that could be a good sign coming to look forward to. Because we did see an increase in the total inventory levels, though, the turnover rate has suffered this week. Here we are remaining and continuing to languish below that 50% mark. And it's now below 40%. On top of the reduction in turnover rate, the average days on market for pending listings has also increased. So fewer homes are going pending, and they're taking longer to do so on average. On the flip side, the over-under number improved this week, and here's your zero line. It actually came back into the over range. We're still sitting within that plus or minus 1% range, so it's not more than a neutral market as far as seller and buyer pricing expectations, but anything back in the over range is a good sign for holding home values up and not letting them continue to drop. The 30-day average on sales price rebounded this week as well after hitting a 6-month low last week. I know I've said this a lot lately, but the lower average sales price is not a direct indicator of a steep drop-off in the average home's actual value. It just indicates that the higher priced homes are not generating the kind of interest that the lower priced homes are. So anything under 1.7 tends to sell, anything in that 1.7 to 2.5-ish range struggles a little bit, and then anything beyond that, when you're getting into the significantly higher prices, tends to do fine as well, because those buyers are less concerned about interest rates. The Triple Q fund fell another 1.5% this week, bringing us to more than 7.5% lower than the previous high back in January, was it? Or June, sorry. That's my 3-month chart. However, this fund is still comfortably in the positive earning range on the year, so a momentary dip in performance should not have any serious long-term effects on our market as long as it, comes back into the rebound here in the next coming weeks. And then the interest rates, they continue to increase this week. They're up over 6.5%, or 6.6% up to 6.6 now. All in all, the weekly adjustments, minor adjustments to the average interest rates isn't really having a significant impact on affordability, but these higher rates just continue to be the biggest hindrance in the market picking up any real momentum. We are sitting a little bit lower than we were a year ago, but again, anything starting with a 6 is going to keep the market from being able to really take off again. This week feels like the dog days of summer are catching up. As the summer vacation season comes to an end, a lot of families are looking to cash in on that last bit of summer before school starts. So that could explain some of the reduction in market movement this week. But the reality is that we're just in a slumping market and have been for quite a while. Nothing new or significant enough has happened to improve the market. But the good spin on this situation is that nothing new or significant has also come up that would greatly negatively impact the market. So we're kind of just in this stalemate here. We remain, like I said, kind of in this blah of a market. If you are a seller though, there are still buyers out there, but they want to be wowed with your property. And if you're a buyer, there are deals to be had if you can be patient and persistent. Thank you for joining me on this weekly update. I hope it helps you understand how our market is impacting your options. Don't forget to hit the follow button down below, or the subscribe button, so you can stay informed on how the market shapes up as we head into the school year. And if you have any questions about how you can navigate the stressful and confusing process and avoid all of that stress when it comes to selling or buying your house, reach out to us directly or leave a comment down below. We are here to help guide you every step of the way. Have a safe weekend, and I'll see you next week with a new update.